Hello, good afternoon. You're watching Closing Trades on ET now, and the closing trades are depicting what's happening across the globe. The Asian markets were down in the trading session. The US futures and the European futures for now are also suggesting a bit of a tempered mood out there, and that's all because of the global tensions which have been, pretty much making headlines throughout the weekend as well. Volatile moves back home as well. Nifty, of course, is just around that 19,500 mark towards the lowest end of the trading session. Volatility has seen a bit of a spike. In fact, India Wix has spiked as much as 10%. The broader markets too are underperforming today. So if you look at the Nifty Bank Index as well, that's down over 1%. The mid-cap and the small-cap arena too are seeing cuts which are more accentuated versus the Nifty. So they are down anywhere between 1 and 1.25%. The banking names, of course, the heavyweights, the likes of HDFC Bank, ICICI Bank, SBI, they are the big drags at the index level. In fact, HDFC is contributing around 20-25% on the downside. And to add to that, ICICI, SBI, almost 50 points downtick coming in on account of just these banking names. IT, which was holding its head above the ground for most part of the trading session, has come off the highs. It's just flip-flopping between the red and the green. TCS, of course, is supported on account of the buyback expectation, and there's a bit of rub-off impact on the likes of Infosys, HCL Tech, etc. So overall, IT is the only green, but apart from that, Aisha, it's largely a day where red is actually dominating the color on the screen.
Oh yeah, absolutely. Had it not been for IT, perhaps it would have been a lot worse, or for that matter, some of the key names like an indices, or for that matter, an ONGC. But it's quite intriguing considering we started off about 0.5% lower, covered all of lost ground, almost broke into the green. And then from there, again, we've seen that, that uptick getting sold into, though again, we are seeing a minute bit of rebound. Let's see whether that sustains or not. Definitely not for the Nifty Bank. That's underperforming what even the other benchmarks are doing in trade. But yeah, Anisha flagged off TCS. They're going to be mulling a buyback alongside their earnings come day after. Remember, they have a sizable cash of about 60,000 odd crore rupees on the book. And if nothing, it would at least defend the stock price at a lower level. The valuation is clearly in favor of, TCS right now as well. So all things point to a buyback, but let's see whether that comes by or not. MCX, of course, not to say that it's not been seeing a steady uptick all through this last fortnight or so, but they finally got that SEBI nod for a derivatives platform, and a new one at that, and the transition is expected this month itself. MCX is holding on to its steady ground, 2100 plus levels on that stock. Adani Ports, that's the weakest link actually in trade today. We just recently got the management commentary as well, in light with all the Middle Eastern tensions, saying that they're pretty much monitoring action on ground, which is concentrated in South Israel. They remain fully alert and prepared with the business continuity plan. Remember, this comes in light with the recent buy of the Haifa port. But yeah, they're saying that the FY24 Haifa cargo volumes, they're sticking by with their earlier guidance, that of 10 to 12 MMT range. But yes, shake off in the market. So let's address that. We've got Kush Bora as well as Kunal Bothra joining in the studios. Kunal, that little bit of an uptick that we saw start of trade, that's also getting sold into, and we're pretty much aligning ourselves with the rest of the global markets. What do you now foresee on the charts?
See, on one hand, the indices are showing a picture that we are getting back into the thick of inline performance with respect to most of the globe, of course, which with what has happened across the globe over the weekend. But I think on the other hand, there are no major decisive signs of a breakout or a breakdown on the indices. So, for example, in the last 3 days of the recovery for the Nifty in the previous week, we've managed to establish a major support at 19,300 odd mark on the spot levels of Nifty, and 19,700 approximately as the upper band of this range for the index. Now at 19,500 approximately on the Nifty, we've come back to the pivot point of this 400-point range for the Nifty. So there is no conclusive trends which are emerging even after this 120 points, 30 points downtick on the Nifty. Yes, we've managed to come back below the 50-day moving average. The India VIX has seen a marginal rise as compared to where it was on Friday, closing at 10.45 levels. So that's the only addition in terms of the negative sentiment, but it's just that the indices are still not broken below the key support of 19,300. We would still hold our stance on the bullish side for the indices.
Okay, maintaining the bullish stance at least for now. Kush, what's your take, and especially the banking names? Again, HDFC Bank, ICICI Bank, SBI, these are the big drags.
First off, thank you for having me on the show. Well, I kind of concur with Kunal, and if I have to just put it slightly differently, the news aside, the geopolitical news aside, I think this was the larger trend that was anyway in place, which is the Nifty consolidating between this 19,300 to 19,550 kind of levels. And that's where we spent a lot of time, in August and September as well. I think results are going to be the next key trigger. And up until then, I won't be surprised if we do spend some time. Although I do see a silver lining here, which is the fact that the 19,500 put, despite the kind of fall that we've seen, that put has seen a very significant addition, which sort of builds trust and confidence on the fact that we might be looking at a near-term support zone, at least at around 19,500, 19,450 levels. And since you asked, and that's precisely the concern, which is the bank Nifty. Even before the day began, we had put a massive writing at 44,500 on the bank Nifty call options, which was suggesting that that was one index which was close to the resistance zones. I'm not surprised to see this kind of fall in bank Nifty. This will remain a bigger concern. IT, auto, metal, some of these names could perhaps help the Nifty push higher, but bank Nifty will remain a cause of concern, and the PSU names that were actually doing well are sort of starting to give way now. So it could be a bit of a tough ride, unless a short covering rally kicks in. I would perhaps be a little cautious on Bank Nifty. And the level that I'm watching for is 43,500. If that breaks, this could be in for a bit of a downturn from here as well.
Kunal, that's exactly the trend that we've been seeing off late, right? The private banking names have starkly underperformed. PSBs, though, have managed to hold out. But in the event that the Nifty Bank does take a turn for the worse, you think the PSBs as well will give up gains?
Yeah, I think it's very much possible, Aisha, because PSBs, they don't have a major share in terms of the weightage on the bank Nifty. Yes, they've done exceptionally well, but there comes a zone, there comes a point where the short-term nature in terms of charts for these PSU banking stocks are bound to get into an overbought nature. So if you look at the last 3 or 4 days, the likes of PNB, Bank of India, Bank, the central bank, etc., many of these two-digit stocks, these stocks have actually gone to an 8 to 10% correction broadly. Now the point is that whether the correction could intensify into these names, that could probably be indicative if there is any further selling which happens into the private sector banking names, because that could add to more pressure on the bank Nifty, and in result it could lead to more selling across the PSU banking stocks, maybe some major round of profit booking which can come back into these names. So I think it's better to try and stay away from this pack as of now. As it is, the markets are not into a risk-on phase that investing into a bit of a high beta sector like PSU banking stocks would be a good strategy or prudent strategy at current levels.
Okay, point taken. So not the best strategy perhaps. That's a view coming in from Kunal. But let me take that view from Mahantesh Sabarad as well. He's joining us on the show. Mahantesh, we've got the Q2 provisional data from a lot of these private banking names as well as the public banking names, and the growth continues to surprise rather positively, barring a couple of names. What then explains this underperformance in the stock prices?
So basically, what is happening with the banking sector is that we had already talked about how the credit growth is shaping up quite well. Most of these banks have better balance sheets relative to what they had even a few years ago. That's primarily driving most of these stocks ahead. But the risk of event that we have seen over the weekend has considerably disturbed the banking sector. Plus, the recent RBI policy statement points out to the fact that we might have elevated level of inflation for some more time. Although the RBI didn't change the interest rates or the growth outlook by much, the inflation outlook has definitely been upped a little bit, and that causes a bit of a concern for most of the banks, particularly on the PSU bank side. And therefore, despite the strong provisional data numbers that we have seen for most of these banks, we see investors actually being a bit cautious before the actual results do get announced.
Well, talking about results, Anisha, slew of IT majors coming out with their earnings. What's the large expectation?
Well, the expectations continue to be fairly muted this time around as well. We're expecting 0.5 to 1% kind of constant currency growth for most of the large IT players. Of course, the mid-cap names might outperform and we might see growth to the tune of around 3 to 4%, but it's largely going to be sluggish this time around for IT yet again. The margins might surprise a bit positively because for a lot of companies, the impact of the wage hike was taken on from Q1 itself. So there would be a case-to-case impact coming in on account of margins. But the most important thing, of course, will be the commentary. There, most of the part of the street is not very excited about it. We are expecting it's going to be more of the same. There wouldn't be any color with respect to improvement in demand sentiment. But what we will try and ask the management is in terms of the deal win momentum, which continues to be quite strong. In terms of execution, how it is panning out, how's the deal pipeline right now. So that will be interesting. But overall, at least from Q2 perspective, we're not expecting a major improvement as per the earnings are concerned. As far as the earnings are concerned of this quarter, of course, the valuations are a bit supportive. They have come off from the recent lows that we had seen. TCS, for instance, is trading 27 times, 28 times, which is much higher than the 5-year average that we have seen on the stock. So let's see how it pans out. And for TCS, of course, the sweetener is going to be the buyback. 18 to 20,000 crore worth of buyback is what the street is expecting. Let's see what the acceptance ratio is, because in the earlier buybacks, we have seen that the acceptance ratio wasn't that strong. In fact, if we can, let's go across to Somit, because he also did some number crunching in terms of what has been the buyback so far, because this is going to be the 5th buyback that the company will be announcing perhaps on October 11th. Let's go across and try and figure out what was the premium in the earlier buybacks and what was the acceptance ratio. Somit.
Well, TCS has always been known for rewarding shareholders, and this is the 5th time that the company has announced that they will be considering buyback on October 11th. Now, in the past, there have been 4 buybacks which have been in the range of around 16 to 18,000 crore rupees, and at that moment, the company had utilized around 30 to 33% of the total cash in books to give away to the shareholders. Now, the buyback price that was considered by TCS on those moments was generally at a premium of around 18% to the current market price, and the acceptance ratio for this buyback. Now, this is the most important part for any retail shareholders. In the first 3 buyback, that was in 2017, 2018 and 2020, the acceptance ratio for these buybacks stood at close to 100%, while the buyback that was done in 2022, the acceptance ratio fell to around 24% because more participation coming in from retail investors. Now, currently, if you see, TCS has a cash of could have a cash of around 60,000 crore rupees on its book, assuming that it uses 1/3 of this cash. The buyback size could be anywhere between 18 to 20,000 crore rupees, and generally, given the fact that the company has kept the buyback price at a premium of 18%, the buyback price for TCS could be anywhere between 4,300 to 4,400 rupees, which means that a company could buy back nearly 1.13% of its total equity capital. Now, what is it in it for the retail shareholders? Now, if retail participation continues to remain high even in this buyback, like we had seen last time, the acceptance ratio could be on the lower side. Now, if the acceptance ratio is on the lower side, then generally the gains for a retail shareholder would also be limited. Now, assuming the buyback price is at a premium of 20% to the current market price, and if the acceptance ratio is as low as 25%, then the actual gain for any retail investor by participating in this buyback would just be 5% and not higher at around 20%. So acceptance ratio is the most important thing, and in the last buyback, the acceptance ratio had come down, and if the acceptance ratio continues to remain low, then the gain for any retail investor would also be low by participating in TCS buyback. So keep an eye out for what is the buyback size that comes out on October 11th and what is the buyback price announced by TCS.
Right, that's going to be an interesting one to look out for. HCL Technologies, though, that's the one which is really at the top of the gainers list. About a 2% uptick is what that stock is seeing. And then, of course, all interest around TCS and the buyback announcement that could be day after. Kush, on the charts, though, does it seem like IT is a sustainable trend?
In fact, the revival was, on the cards. A lot of these names had fallen to, these support levels. They were showing, some of them were showing positive RSI divergences as well. So this isn't completely a surprise. Plus, a couple of days ago, we saw the Nasdaq also rebound. So there is also this, sentimental rub-off that had to sort of kick in. So not at all surprised. So if I have to sort of pick up a few names from this entire space, TCS and HCL, like the ones that we just discussed, will surely be, in the large cap space. From the small cap space, Persistent, Bsoft, these are a couple of names that pop up. So these are the names that one should participate, and especially considering what the markets are doing right now, IT does seem like a defensive play. It does seem like a place to sort of play. Have your trading bets on. So some of these names they were due a rebound, and glad to see that it's already come around.
Yeah, Mahantesh, which are the defensive bets that you would like to take in the markets right now?
obviously the consumer sector, FMCG sector would be the defensive ones one should go for, because these are typically not affected by the geopolitical events, although they are exposed to certain amount of costs related to the crude oil going up, but that's something that they have the power in terms of negating it by price increases and so on and so forth. And we are gonna enter into a quarter right now, which is the festival quarter, where most of the FMCG companies would drive up their sales, would be ready for higher sales promotion activity as well. So with that background in mind, FMCG companies would tend to generally be very defensive during such periods of stress. When we have VIX level going up upwards of 10% in just one day, defensives would save the day for most of the investors.
Coming in on FMCG, although of course this quarter there's been continual rural pressure, and which is why the volume uptake from both GCPL as well as Marico has been on the lower side. On that note, we are going to take a very quick break, come right back, lots more to talk about on the other side. Back with closing trades right here in 80 now, still under pressure. Although we've not seen a very savage cut, we've still managed to defend that 19,500 print, given that we got pretty close to that level earlier in the session today. So back again, lower by about 125 odd points, but that's pretty much the sentiment across the street as well. Even Europe has started off on a bit of a back foot, marginally soft, but in the red regardless. Second on what the US futures as well are indicating, because once again it's a 0.5% downtick for both the Nasdaq as well as the S&P, and the Dow as well is hinting at a start which is lower by over 100 odd points or so. The one stock that we should bring up for you on your screens is definitely Adani Ports. Now there are concerns with regards to what's going on with Israel and Hamas and how that's going to impact the traffic at the Haifa port. Although the management has said in an official comment that they remain fully alert and they're prepared with the business continuity plan and that they're monitoring the action on ground. But sentimentally, you're seeing quite a bit of fall in that stock, about 5% or so as we speak right now. But Mahantesh, this as well as JSW Infra, the newly listed player, considering these are the two peers, just wanted to understand if you would buy into any if they were to fall further.
See, Adani Ports is considered a relative defensive stock among the rest of the Adani pack per se. But then I wouldn't be investing into Adani Ports just as of now, because the situation is just too volatile. It just not just affect their Haifa port and outlook thereof. In overall global trade itself could see a bit of a wind down for at least a few days before anything removed, and every day counts for port activities. As far as JSW Infra is concerned, it's a new listing. It has listed wonderfully well in terms of the premium and so on and so forth. So obviously from that perspective, it does appear quite expensive. We never know which investor would trigger a profit booking in that particular stock, and therefore would be a little wary of that stock as well. Would actually participate in any of these stocks post the results, because the results are the benchmark for any fundamental valuation outlook to change. And therefore, the upcoming quarter result as well as the quarter result of December, where we can at least be able to paint a little picture of what's likely to happen, could help the fundamental analyst to view it objectively. Till then, one shouldn't jump into any of these stocks.
Taken. But Kunal, in the meantime, let's talk about the stocks which are actually bucking the trend and are at all-time high level today. Case in point being MCX, higher by around 3%. You also have ITI, which has a large amount of volumes today, higher by 16%. And then Oil India, which is sitting with a gain of around 6 to 7%. What does the chart check suggest?
So MCX, again, I think post the news flow for the stock price, it's just added to the positivity for the stock. I remember, I think last week or so when the stock had fallen down for a single day by a margin of 8 to 10%, that was a classical time to buy the stock closer to that 1800, 1850 odd mark MCX, and from there on we are now looking at 2100. So what the stock has done is it's shown a rise of base or support for itself. So from 1800, 1850 levels, the supports for MCX is now closer to 2000 levels. So maybe in case if there is any kind of a profit booking post the news flow, which may occur in the next couple of days, that could be a good level to buy MCX again on dips. For the other name which you mentioned, Oil India, it's a classical chart because I was actually looking at the stock right in the morning when the stock had made a fresh 52-week high for itself. The quarterly charts for the stock is very attractive, broken past about 300 levels on a psychological basis, and even the last 2 years, specifically from 2020-21 odd lows for the stock went to sub 100 rupees. It's done exceptionally well. So another PSU name which has come back towards a fresh 52-week high, life high levels, and again showing very good volume as well as momentum. ITI I don't track, so I'll skip that.
Mahantesh, just wanted to get your take on the urban consumption trend. Actually, not just urban consumption, but premium consumption trend, if I can call it that. Looking at Titan's updates, and given that we've got the festive as well as the wedding season only ahead of us, the Q2 updates look pretty smart, both for the jewelry as well as the eyewear segment.
They indeed are growing off the low base that they had formed during the COVID period, and these are quite exciting times for these so-called luxury plays within the consumption space, particularly limited to the urban consumption space. But then one should be very cautious about the valuations one ascribes to any of these companies. They have been relatively very premium even in the past. So by past standards, they are quite premium. But now what's really happening with them is that there is a lot of online presence of various companies, which is nagging away at competitions from some of these companies. Even in premium categories, we are seeing online sales picking up quite smartly. Even for automobiles, which are high value ticket items, you have online sales that are at least happening. If not an online sale, at least an online lead, I would say. So one would be a little cautious about some of these old companies who have to not only defend their market share but also depend on huge amount of promotion expenses just to keep sales sort of static.
Okay. But Mahantesh, what about their financial ancillaries? And today there's a bit of an up move on Angel One, Anand Rathi Wealth. My colleague was also talking about how the demat accounts keep on inching higher, and also the insurance names, and that general insurance and life insurance update should come up for you on the screen. The likes of Star Health, etc., have managed to do quite well for themselves.
So actually, some of these broking names that you talked about, and particularly on the online side, are seeing a huge uptick in volume that is happening. And we have not seen the FNO volumes actually die down, which was the general anticipation everywhere when SEBI started tightening. The retail participation in trading activities has been phenomenally high. It started around the COVID period, and it has continued to remain higher. I guess this year, within a span of 9 months, the overall volumes have actually crossed on the retail side, actually crossed what we had done last year. So obviously, some of these online broking arms tend to capture all that incremental trading volumes that you see, and goes on to build on their profitability base. So these companies are started to do really well. I would guess this is a fundamental change that is happening in the market. You will have more and more participation coming in, and the beauty is that once you have a customer acquired, the revenues continue to keep on flowing.
Okay, point taken. In fact, let's also bring in our colleague Anurag Joshi on the latest he had on Cipla, because we do understand that that deal is also hitting a lot of roadblocks. Of course, the valuation that they were expecting for the company and the transaction to go through for Hamid's stake was quite high. So it seems like they're getting a bit of a pushback from rest of the investors. Let's go across to Anurag to get the latest on this one. Hi, Anurag.
The stake sale proposal in drug firm Cipla has hit a roadblock on differences among the promoters overreaching a common valuation. Now these differences among the founders may lead to a delay in the deal until a common consensus is reached over the valuation. Cipla's founders over the last few months have been exploring the possibility of offloading their about 33.5% equity stake in the company. A group that holds 25% equity stake, and that includes the non-executive chairman YK Hamid, that has a view on the deal, and there's a divergent thinking on some issues from a promoter group that holds the balance about 8% equity stake in the company. In the recent past, the suitors for the deal have included Torrent Pharmaceuticals, which has been seen as a key contenders, and that has put a non-binding bid for the stake. And the other contender besides Torrent is Dr. Reddy's Labs. PE firm Blackstone was earlier interested in the deal and had put in a non-binding bid, but withdrew the plan because of what it perceived to be the purchase cost for the transaction.
Rag, we'll leave it at that. In fact, Mahantesh, we'll let you go as well. Thanks as always for taking the time out and joining in. Let's just revisit what the market is at. 19,546 for the Nifty futures. And we're pretty much status quo when it comes to the spot Nifty as well, defending the 19,500 print for so far at least. A bit of a spike up coming in on crude prices. It's a 3% move for WTI as well as Brent as we speak right now. Let's take in some mid-cap ideas as well on that note. Kunal, what's on your list?
So in terms of closing trade or BTST?
Yes, that's right. Closing
trade. Yeah. So closing trade would be Alchem Labs. Now, actually, this stock has been correcting in the last 2 to 3 months. I think there's been more than a 10 to 15% correction on Alchem Labs, and the stock has come back towards 3,500 odd mark on the spot levels. But now the indicators are showing signs of a bullish RSI divergence. So that's like to go contrarian on the stock and would go for a buy on Alchem Labs.
Right. Kush, what about your closing trades?
The radar and has been for some time now is actually Sundaram Finance. Now this stock's already given a breakout a while back, from a 2650 odd levels, but recently it's continuing to see high volume and high delivery markup as well. So it's gone into a bit of consolidation phase after that breakout, but the bias still remains positive despite the kind of market move that we've seen. So for me, Sundaram Finance is something that I would consider on the long side. Could be a bit of a positional bet, given the nature of the stock. But 3250, 3400 are the levels that I'm looking at it, and 3050 is where I would place my stop loss. So Sundaram Finance is my closing trade.
Finance is your closing trade. On that note, actually, let's slip into a very short break. Don't go anywhere. When we come back, we track the last 30 minutes of the trading session.